Welcome back to Click Capital, your go-to channel for all the latest market data analysis and charts, and a pretty big day here with Tesla down almost 10%, which is the biggest drop all year since we bottomed out at 110 back here. And with earnings coming off yesterday more than 20% since last year, I think we could fill the Q4 earnings gap and come down to 146 over the next week or two. And now Meta Platforms has a bigger market cap than Tesla with that move. It wasn't too long ago that Tesla was twice as big as Meta. And with that big move down in Tesla, it has brought down other high growth, high valued stocks like Nvidia, almost down 3% today. And we saw some other big moves out there today with AT&T down over 10%. And with that, we saw the whole market come off pretty red across the board, with the NASDAQ leading the way and still building this big bearish divergence we've been watching here for the last couple of days. But stay with me right to the end. We'll come back to the charts. First, we'll go over all the day's data. So mostly red out there today across the heat map. Some deep pockets of red with the high growth names that we just mentioned, and the only things that really held up well was consumer defensive, healthcare, and utilities were mostly flat as well. And energy stocks continue to pull back with the price of oil coming off. We saw jobless claims come in a little higher than expected on signs the labour market may be contracting. And we've got those PMIs out tomorrow. And surprisingly, the fear and greed index is still elevated at a 68 handle here. Dark pool buyers still showing not much interest in this rally. We saw corporate insiders tick up a little yesterday with their sales, and their purchases still really low down here with this blue line. Was a little more busy in the options market today with 38.8 million contracts changing hands and roughly even with 51% of them calls. And a few more puts being bought today in the big names. Fed fund futures today pricing in a slightly higher chance than yesterday, with 85% probability that we're going to get a hike at the next Fed meeting in May. And those SP 500 speculative net positions still really low at a net negative of 307,000 contracts. So a lot of people betting in the futures market that the market has turned and is going to go lower. Okay, that's it for data today. Let's head on back over to the charts. And all the international stock indices look to be stalling out, as well as Canada's TSX, the English FTSE, the German DAX, Japanese Nikkei, the Aussie 200, and the China 50 as well. Saw a bit of an uptick in volatility today, leading up the front with VIX 9-day up 5.8% to 15, and the VIX at 17, but still really low in this big support zone. And volatility of volatility, the VVIX index has actually been marching higher this last couple of days, and sometimes that can lead the VIX. And the volatility risk premiums continuing to creep up, closing higher today at 6. And once again, this can lead the market, so it may have indicated that volatility has bottomed and the market is expecting some movement in the upcoming days and weeks. Bond market volatility is still elevated versus stocks, and the equity put-call ratio is still under 1 at 0.94. Breadth looks to be turning, with stocks above their 20-day average down to 70%, although we did see a little tick up in NYSE stocks making new highs today at 64, but NASDAQ still in the middle of its range at 39 new stocks making new highs. And all the growth cyclical spreads came off today. Here's all the growth sectors versus defensive sectors. High beta versus low volatility was down over 1%. Growth versus value, mostly flat but coming up to its 50 bar, and tech stocks versus SP stocks sitting right at its 50 bar, and this trend could be about to change that we've had in place pretty much all year, with tech outperforming. Small stocks look to be trying to put in a bottom here versus SPY. We can actually see a divergence forming here. International stocks still performing well relative to American stocks, and a bit of risk coming out of the bond market as well, with high yield bonds moving down against treasuries sitting right at their 50 as well. Government bond yields came off a little bit today. We had the 2-year close at 4.15 and the 10-year at 3.53. But Fed fund futures are still holding up there near the top of their range over the last couple of weeks, as the market is still pricing in another hike in the May meeting, and a small probability of another hike in June as well. So if you want some clues as to where tech stocks and NASDAQ could go next, keep an eye on these Fed fund futures, as tech stocks really don't like higher rates. And we seem to be uptrending again on the Fed fund futures here. With those bond yields coming off a little bit, we saw the TLT ETF climb today and got it back above its 50. And high yield bonds found lower lows and lower highs as well. The dollar still consolidating here in its major support zone at 101.50. And Bitcoin looks to have rejected off this major resistance zone at 30,000 and is pulling back here. Commodities continued their pullback today, and gold as well, but still holding that $2,000 an ounce level. And crude fell a little bit to 77 a barrel, but we'll be looking for this gap to hold around its 50 bar to show that the bulls are still in control. Natty gas still tracking sideways here. Over to stock sectors, and pretty much all red out there. We saw ARK come off 3.7%, that holds Tesla, along with a few other overvalued growth names. And surprisingly enough, in a sea of green, actually the winning sector today was home builders, which is a little surprising given we've seen building permits come in lower than expected and new applications for mortgages at multi-decade lows as well. Not to mention a housing affordability at multi-decade lows as well. And since we tagged the top of our buy-sell band here today and a little divergence forming, it looks to me like it could be getting close to shorting home builders again. Regionals came off 1.8% and are still struggling to get that pop-up like we've seen in the big financials. And defensive sectors, healthcare, staples, and utilities held up pretty well today. JP Morgan still holding up pretty well. Same with ExxonMobil and Tesla. With that decline in profitability, it looks like the market may be losing a bit of faith in Tesla. And I think there's a good chance that we get this gap fill over the next week or two down to 146. And whether we find support there or not is yet to be seen. But for now, it looks like the bears are in control as we gap down. Tried to rally, but the bears came back in and managed to close the price lower than when we started the day. And another important stock to watch for clues on the overall general market sentiment and direction is Apple. Looks to be stalling out here at the top of its range. And I'll just go out to a weekly chart for you on Apple here. And we can see it's ranging back up to this big resistance zone and not too far off the highs that we saw in late 21 actually. And one could say that we're close to completing this upswing, which has been similar in distance and length of time like the one we had in June last year back here. So given overall market sentiment and the climb back up in rates and a lot of these mega cap techs with their flatlining growth and profits, I would be surprised to see Apple take out 170 and continue further. And we have this one on our short watch list as well. If we push a little bit higher towards 170, we'll be considering to short it up there. Other mega cap techs like Microsoft as well, stalling out just below a major resistance zone. Amazon going sideways. Google the same story. And Meta looks to be pulling back a little bit as well. And Nvidia, my clients and I got short yesterday at 278 and we're down almost 3% today. You can see the market gap down. And we can see on the 15-minute chart here where we opened today, we gapped down, initially rallied up, took out yesterday's high just above 280. But then sellers came in and force and we couldn't quite get back there. So it looks like there was a lot of people ready to step in and sell this stock, especially with Tesla coming off so hard. I mean, over the last couple of years with all this stimulus money, there's been a lot of correlation between the real high growth stuff like Tesla, Nvidia, Bitcoin. So when one comes off hard, it can kind of cause the whole pack of them to fall off as a lot of people are all in the same stuff. So we continue to believe that Nvidia is in a topping formation process that could still go on for some weeks yet, and we're looking to hold this as a core short position in our portfolio and get out in the mid 100s at some point later this year. AMD as well has lost its 50 bar. And Netflix, it's sitting right at its 50 bar too. Meme stocks got bushwhacked today, pretty red across the board here. Big Bear AI down 6.7% and C3 AI down 8.8%. And coming up to this significant support zone, which if it loses may confirm this kind of triple top head and shoulders formation. And we could crash lower back down to under $10, which may signal that we have seen the top in this AI hype train over the last couple of months. And active today was AT&T, which made a huge move for a big $120 billion stock that normally has relatively low volatility. They reported earnings today and cash flow came in a lot lower than expected and the market absolutely dumped it, which caused similar stocks like Verizon to fall pretty hard as well, off 3.6%, and they're reporting in 5 days. And these stocks have been cheap for a while now. Just going out to a monthly chart, we can see we are near this big support zone and possibly putting in a rounded bottom formation here, and you can see dividend yield is 6.7%, and our stock fair value indicator has fair value at just under $59 a share, so the stock could be getting cheap here. And the banks all came off today. However, all the big guys are still holding above their 50 bars, so indicating that an uptrend is still in place. Except for Schwab, which is still yet to close above its 50 bar, which could happen in the next few days as the high 40s look to have been a cheap spot for Schwab. Okay, so that's a quick look at all the major market categories today. Let's go back to the main indices for our final outlook. So much the same thoughts as the last couple of days. Still got these big divergences building here, especially between the yellow line, which is a measure of global central bank liquidity in the markets, and the SP 500 at 41.29. So still over a 200-point gap between the two. And we've gone negative on our hidden divergence indicator on the SP 500, the NASDAQ, the Dow, and the Russell. Not quite yet, but getting there. So I'm still bearish on this market, and with those moves in Tesla and Nvidia today, that further confirms my belief, and I continue to have the portfolio tilted 40% net short. And we're still early in Q1 earnings season, so we'll see what the rest of earnings brings us tomorrow and next week and go from there. That's all I have for you today. Thanks very much for tuning in, and hope to see you again tomorrow afternoon. Cheers.